Once again, this is Ian Gendler, Director of Research at ValueLine. Today, using ValueLine's digital platform and investor tools, I'm going to show you how to quickly and easily find worthwhile investment candidates. Going further, I'm going to recommend one stock to buy right now. After the presentation, as mentioned, we have a lot of time for questions and answers. In addition, to hear this webinar again later, you can access it via our homepage, valueline.com, as well as our YouTube channel. The YouTube channel will also have past webinar presentations. To start, for those joining us for the first time, I want to provide a brief overview of who we are at ValueLine. We are a New York headquartered corporation that has been providing investment research for more than 85 years. Our flagship product is the ValueLine Investment Survey. This service is a unique source of financial information and is designed to help investors make informed investment decisions that fit their individual goals and levels of risk. The product includes data, information, and analysis on more than 1,700 equities that trade on the New York Stock Exchange, NASDAQ, and Toronto Exchange. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and much more. This service, which is published weekly, is created by ValueLine's research department, which is comprised of more than 70 analysts, economists, data experts, and quantitative specialists. Our research is completely unbiased and independent. Unlike many Wall Street brokerage firms, ValueLine has no investment banking business with any company, including the 1,700 that are included in this service. ValueLine does not execute trades for its subscribers and therefore has no vested interest in whether our subscribers buy, sell, or hold a specific equity. What's more, our staff of professional securities analysts are not permitted to own shares of any company that they cover. In order to provide some direction in regard to our stock search, let's start with an overview of the economic situation, as well as the ValueLine Research Department's view of the stock market. The following content was prepared by Harvey Katz, ValueLine's chief economist. The economy is doing just fine, but investors appear to be paying scant attention these days. On point, data showing a rebound in retail sales, surprisingly strong figures for housing starts and building permits, and increases in industrial production, albeit reassuring, are having little impact on trading. Instead, Wall Street is focusing intently on earnings, with reporting season now in full swing, and to a lesser degree on the Federal Reserve, political headwinds, and international developments. Let's look at these events individually. Earnings. Expectations have been for a strong opening period profit performance, and these high hopes are being realized for the most part. To wit, we are seeing especially good performances from the nation's banking and financial services powerhouses, as well as from certain industrial concerns. Improving business fundamentals and a drop in the corporate tax rate following passage of the tax reform legislation are combining to lift early 2018 earnings appreciably. The Federal Reserve. The central bank raised interest rates last month, and expectations are that it will do so again in June and September. For now, the likelihood is that the Fed will hold off on lifting borrowing costs in December, but that outcome is not etched in stone. As many as 3 additional upward rate adjustments are possible in 2019, unless economic growth moderates more than we expect. Domestic and international firestorms. On that count, the plate is full, with current and potential crises dotting the landscape. These include investigations in Washington, bombing strikes in Syria, and our uncertain relationships with Russia and China. The ebb and flow of these issues have vexed traders from time to time and generated an unwelcome step up in stock market volatility, in which daily swings of several hundred points in the Dow Jones Industrial Average have become commonplace. This is in stark contrast to the almost unprecedented run of stability during most of this multi-year bull market. In conclusion, with such uncertainty, positive returns for stocks are hardly assured. But with the economic and profit fundamentals still quite compelling, the case for equities remains fairly strong. Now that we have a firm base in regard to the economy, stock market, and our outlook, it is time to start the process of finding a stock to buy right now. For our search, I'm going to use several details of Mr. Katz's view. For example, with uncertainty being a key factor in the market, I'm going to steer my search toward companies that have a history of consistent revenues, profits, shareholder returns, as well as strong balance sheets. Put another way, I'm going to try to find stocks that are relatively safe, that stand a good chance to best the broader market without taking on undue risk. Also, if the stock market falls, these issues should hold up better. For those followers and fans of Warren Buffett's investment mantra, this is going to sound quite familiar. I will go into far greater detail when we make our way to the screener, but for now, please notice that we are currently on our homepage, valueline.com. On this page, you can access, free of charge, daily market commentaries, as well as general interest articles that are written by our analysts. Examples of such content are analyses of economic releases and quarterly earnings supplementary reports on the 30 components of the Dow Jones Industrial Average. I am now going to sign in with my username and password. After entering my credentials, I am taken to the welcome screen. From here, I can quickly get to many important areas of our website, including Browse Research, which is the main home for our core equities products. I can also head to our investor tools, as well as home pages for our monthly stock selection services. That said, for this presentation, I want to start at the dashboard, which is the main landing page for our subscribers. Before we start our search, it is important to view some statistics that display how the Value Line universe of 1,700 stocks is being valued in the current market. These stats are published every week in the Summary Index, which can be accessed via the quick links. As you can see in the box on the left in the middle of the page, the median stock in our universe is trading at 18.8 times our 12-month share earnings estimate to September 2018. This is a good time to mention that Value Line's estimates are created completely in-house by our research team. Our PE calculation is also different than many other research houses. More specifically, we use a combination of reported figures and estimates for our PE ratios, which we think is better than using a trailing figure or just estimates. For those of you that have participated in one of my previous webinars, you may have noticed that the 18.8 is below recent levels. True, the recent market correction has something to do with that, but I also want to mention the impact of the Tax Cuts and Jobs Act. Since that legislation passed in December, we have adjusted our financial models for the stocks that we track. Many companies in our universe were previously paying upwards of 35% in corporate taxes, but will now pay closer to the headline 21% figure. Needless to say, this will be a boon to profitability, and thus our PE multiple has come down. As for the 18.8 specifically, it is still somewhat elevated on a historical basis, but is consistent with levels reached during other multi-year bull markets. Let's also take note of the median dividend yield, which is just 2%. In addition, Value Line's 3 to 5 year median price appreciation potential is 40%. We have been calculating this latter value, which is commonly referred to as the VL map, for decades, and recently it was at its lowest level ever at 20%. Again, like the PE, the market correction helped. In addition, we are now factoring in lower taxes, which will help fuel profitability out 3 to 5 years. Just as important, we are now projecting results to the 2021-2023 timeframe. Previously, we were using 2020 to 2022. All told, at 40%, this is still below the historical average. The VL map has proven to be a worthwhile indicator for evaluating the broader market, and a number of published works have focused on this proprietary metric. For those interested, I recommend a simple Google search. All told, and this probably won't shock many of you, but according to these proprietary metrics, we feel that the market is not exactly ripe to take off from here. This also jives well with Harvey Katz's conclusion, which stated that, with such uncertainty, positive returns for stocks are hardly assured. That said, hopefully, we will find some stocks in our search that will tip the scales back in our favor. Now let's go to the screener and find some candidates. This important investment tool, as you saw earlier, can be accessed via the welcome screen, as well as through the Find Ideas tab. Subscribers have access to more than a dozen preset screens, as well as almost 50 fields. I should also note that the screener possesses more than 200 fields in total, but those are only available with higher-level subscriptions. I'm now going to run a screen with the goal of finding high-quality stocks that have a history of good financial results, healthy shareholder returns and balance sheets, and are poised to outperform the market. Let's start with the risk part of it. Due to the uncertainty that we have already discussed, I want to get rid of lower quality stocks and make sure that my selections provide some defensive properties. There are numerous risk and volatility measures, with beta probably being the most popular. However, I'm going to utilize Value Line safety ranks. The safety ranks measure the total risk of a stock and is arranged on an easy-to-understand 1 to 5 scale, with 1 being the most stable issues. I want to highlight the fact that stocks ranked favorably for safety have, in the past, held up far better than the broader market during corrections and downturns. For this, let's focus on equities ranked 1 or 2 for safety. So you just find the field, and click on 1 and 2. These are the most financially strong companies, and using this field will almost certainly weed out smaller market capitalization companies, which often experience significant price swings in a volatile market. We touched on dividend yield earlier, and the median yield for our universe is 2%. Let's make sure our list only includes stocks that offer a better than average yield. In addition to income, dividend stocks tend to hold up better in down markets, so this is another way of adding a component to our screen. So I enter 2% in the from box. I could also set the range by using the scrolling bar. Now I want to include a field that takes into account companies' recent financial results. Thus, I'm going to add 5-year historical growth rate for sales and set the minimum to 8%, which is a significant figure. Also, for the Warren Buffett fans, we have to include book value growth, which shows the increase of shareholders' equity over time. Let's set the 5-year growth rate again at 8%. Another Buffett/value metric is return on shareholders' equity, which is calculated by dividing a company's profits by its shareholders' equity. It shows how much profit a company generates with the money that stockholders have invested. When considering your next equity purchase, I recommend you view this information. It can prove quite helpful. For this field, I'm going to set the low bound to 10%. I want to include one final field, which will focus on potential stock price appreciation. Hold on one sec. I don't like the way that loaded. I knew that didn't look right. All right, one final field. Of course, adding in all these defensive and value fields are great, but in the end, we want the stock to go up. I touched on this earlier with the VL map, but for all 1,700 stocks in our universe, Value Line's analysts create 3 to 5 year financial projections. Using these values, we create a target price range for each equity. I want to highlight that Value Line is one of very few research houses that provide financial projections that far out. We think that these estimates are of great value to our subscribers since they show a long-term trajectory of the company. For the final field, I want to tap into this and include the projected 3 to 5 year annual total return percentage, and I'm going to focus on the low end of the range to be conservative. Again, I'm going to use 8% as my starting point, since the historical annual return of the major stock market indexes is about 8% going back decades. For this, I have to type in 0.08 into the from box. Okay, down to 4 results. According to our criteria, these stocks possess defensive properties and relative safety, have a history of good financial results and shareholder returns, and finally, should perform well over the next several years. All 4 may well make a good addition to your portfolio, but after evaluating each before this presentation, I'm going to recommend Arthur J. Gallagher, ticker AJG, as the one stock to buy right now. Before I go any further, I want to point out that screens can be saved and revisited by utilizing the button at the top. Let's now get some more information in regard to AJ Gallagher. Clicking on the company name will take us to the digital report. As you can see, the data, information, and analysis is arranged in more than 15 modules or boxes. These modules can be moved around, resized, and hidden so you can create your own customized stock report. For instance, since we spoke about it multiple times already, perhaps the 3 to 5 year projections are most important to me. I can simply click and drag that box to the top. You can also resize it. Or, since we're already focused on safety, maybe we don't want financial strength to take up so much space. I can simply click on Hide, and it'll go away. Once I alter the presentation to my liking, I can save the changes from the sliding horizontal action bar. The next time I come to this stock report, it will look the way I set it up. To start, let's get some information about Gallagher, which can be retrieved from the business description box. The company provides insurance brokerage, risk management, and employee benefit services to a wide variety of companies and government organizations. It has almost 25,000 employees and ample institutional ownership. How is AJG stock done of late? From the valuation module, I can quickly pull up a stock chart. And the yellow line is the stock price movement. As you can see, the equity has been trending higher over the past couple of years. I'm now going to take a quick look at the Analyst Commentary to get some more information in regard to what is going on at Gallagher. As you can see from the first few lines of the report, recent financial results have been quite good, thanks to strong demand for its brokerage and risk management services. Later on in the report, editorial analyst Brian Fong prominently mentions that the company should continue to do well and that the stock offers appealing investment attributes. When you have the time, I recommend that you peruse his full write-up. I now want to show you our classic PDF report, which is included with a digital subscription, and provide some additional analysis on why we think AJG is a good choice. These reports can be accessed from the PDF button on the top. Just a quick glance at the statistical array, or the main body of numbers, we can see that the company's sales, earnings, and shareholders' equity and returns are all trending in the right direction. Over on the left, we see that the debt is only 39% of capital and that the company has more than $680 million in cash. It certainly boasts a healthy balance sheet, and it garners an A for financial strength. All told, we think that AJ Gallagher ticks a lot of boxes and is one stock to buy right now. That said, some listeners on this call may want to wait a few days before jumping in. Reason being, we will soon be putting out a new report on this equity, and it is scheduled to report March period financial results on May 1st. Waiting until those two events may prove prudent. More information is always better. If you do choose to go down that route, in the meantime, we recommend that you utilize our watch list and alert tools. Perhaps create a watch list with the 4 stocks we found earlier and keep track of them until you are ready to make a financial decision. In addition, you can create an alert that will email you or text you when an important event occurs. These include when we put out a new report, when we change a rank, or when a particular stock increases or decreases in value by a percentage of your choosing. In all, more than 15 alerts are available. These tools can be accessed via the Find Ideas tab which I'll quickly show you now. I hope you found the method for finding a stock to buy right now interesting, informative, and efficient, and I encourage you to utilize our investment tools in your stock selection and management process. Lastly, I know this procedure does take time. That is why I want to close with introducing you to Value Line's model portfolios that can help alleviate the work of finding worthwhile investment candidates altogether. Part of the Value Line Investment Survey is the weekly Selection and Opinion newsletter. Along with economic and stock market commentary and data are 4 model portfolios. You can also access that from the Quick Links box. Each model portfolio has a different investment strategy, is actively managed, updated each week, and always contains 20 stocks. The portfolios are overseen by senior research analysts. Portfolio 1 is best suited for aggressive investors and focuses on stocks that are expected to outperform the broader market over the year ahead. Portfolio 2 should be of interest to more conservative investors and focuses on dividend-paying stocks that also offer worthwhile appreciation potential. Portfolio 3 chooses equities with long-term price growth potential and, of course, is best suited for patient investors. Portfolio 4 is filled with stocks that possess above-average dividend yields and is for investors seeking current income. We have a great number of subscribers that follow these portfolios. For those interested in possibly adopting one of these strategies, here are a few helpful details. New positions always amount to 5% of the market value of the respective portfolio at the time of the trade. Any dividends received are simply taken as cash. They are not reinvested. Lastly, the portfolios are not rebalanced. All told, the model portfolios represent some of the Value Line Research Department's best investing ideas, and we recommend that you read the analyst-created content and look over the portfolios for possible additions to your holdings. Subscribers looking for a total investing solution are also encouraged to check out our premium monthly selection services, Value Line Select, Dividend Income and Growth, Special Situations, and Select ETFs. If this is something that sounds up your alley, call 1-800-VALUE-LINE for a free sample report and trial subscription. This marks the end of the formal presentation, and I will now tackle your questions. All right, bear with me 1 second while I find some. Okay, here's the first question. One person said they missed the last webinar, the last one thought to buy right now. How do I get that? If you come to our dashboard, there's a link to the videos. Oh, sorry, on our homepage. You have to do it signed out. And there's the link to the videos. You can also get them from our YouTube channel. Just go to YouTube and type in Value Line. When you set a screen for 5-year sales growth at 8%, is that 8% over 5 years or 8% annualized? It's a good question. It's 8% annualized. You entered 0.08% in the 3 to 5 year growth field, which is not consistent with the other entry, but that's correct. It's just how that was built for whatever reason. 0.08 is 8%. That field just acts differently. I wish I had a better answer for you. Let me just see if there's any other questions. Oh, here's a question about ETF Select. ETF Select is a monthly product, and we basically use all of our analysis and expertise, and each month we recommend one ETF that we think is going to best the broader market. It's a 15, 20-page report on that ETF, as well as updates to previous recommendations, and a major discussion of the top holding or the top holdings of that particular ETF. Next question. Does Value Line offer portfolio construction modules? We do in our mutual funds product. It's within a guide. There's a questionnaire, and you can fill it out based on your level of risk, time preference, etc. All of that can be accessed within the investment education section. Where did you see cash on the value line report for AJG? Under the current position, cash assets. Do you report the returns on the model portfolios? Yes, we update them quarterly, and we send them out to people that ask. We also periodically publish them, but usually we just send them out. One word of warning on that, because we get the question all the time of I follow the portfolio, but my returns are different. We make purchases as 5% of the portfolio. So we also will periodically adjust holdings that, for instance, if one does really well, we'll sell shares to knock it back down to 5%. Our returns also don't include dividends or trading costs. If you like the returns, you can actually just email me at igendler@valueline.com. That's the letter I, GENDLER @valueline.com. Next question. What does the value line technical rating mean? Let's go back to the Gallagher report. And as you can see, for this report, the technical rating was 3. It works the same way as timeliness and safety, 1 to 5, 1 being best, 5 being worst, meaning it will likely underperform the market. The technical rating uses a series of price movement and price changes over 10 different time periods, and things like weekly, monthly, quarterly, etc., and looks at those changes in price and tries to expect future price movements. So all the variables that go into it are just price related. But it works the same way. It's on a bell curve, set amount of 1s, same amount of 5s, etc. Here's a question in the screener about picking industries. You know what? I'll go back there. All right, so I'm going back to the screener. The question was, can you pick more than one industry? So you can only do it one at a time. I'm sorry, you can't do it. I'm staring at this. So if you just select is one of, and then put in as many as you like. You cannot choose by sector, though. Our analysis is mostly industry than stock. We do some reports on sector, but it's not included in the screener capabilities. I believe, oh wait, there might be others. Hold on. Oh, there's a few more questions. Here's a question. Can you touch on the box in the lower right corner? I'm going to assume that you're referring to this box. These are 4 value line proprietary metrics. Financial strength, I mentioned briefly in the presentation. Each stock is evaluated on a grade, obviously A being AJ Gallagher. It goes from C to A++ in 9 increments, with B+ being average. Financial strength is you look at things like cash, debt, cash flow, profitability, etc., and that's where the grade comes in. Stability is exactly what it sounds like. It's a score out of 100 in increments of 5, and it's how stable the issue is versus the market. And if you look at the stock chart, as you can see, Gallagher has done very, very well and isn't prone to big gyrations or swings. Price growth persistence is how it increases over time relative to the market. also out of 100. So this is 75 out of 100, or better than 3/4 of the universe. And earnings predictability is how consistent their earnings are from quarter to quarter and year to year. And if you just take a quick look in their earnings per share, as you can see, it's, with the exception of back here and then into the recession, it's a pretty steady increase going up. So it garners a good score for that as well at 80. Next question about timeliness. How can timeliness be 1 or 2 and 5-year predicted value a lower number than today? I apologize, but I'm not quite sure about that question. I'll break out as much as I can. Timeliness 1 or 2 means we think this stock will outperform the broader market over the next 6 to 12 months. You know what that might mean? Sometimes we have a stock where the current price is higher than our target price range, and that stock might be timely currently, and it's the difference in time periods. So we think the stock will perform better over the near term, or 6 to 12 months, but underperform over a longer period. I hope that answers that question. By the way, if I don't get to anything or you need more information, please do email me. I will happy to talk on the side about these things. How does your service help with regards to options trading? We have a whole options product, which I don't really want to take the time to demo, but if you call 1-800-Value Line, you can get a free trial. You can also talk to one of our options specialists who can give you more information on that. Can you include various data, dividend yield, along with stocks I list in the watch list? Yes, the watch lists are customizable. There's 10, 15 different fields that you can put in there. A question about Value Line Select. Is it only available in print, not online? No, it is available both in print and online. Okay, explain the significance of the actual value line on the stock charts. Okay. So this bold line and then dotted at the end, that is the cash flow per share line, or commonly known as the value line. We look at historical price activity and historical financials to plot that line. As you can see, 13.5 times cash flow per share mirrors A.J. Gallagher's share price pretty well. This is another metric to see if a stock is undervalued, overvalued, or fairly valued. Basically, if the stock price marked by that dot is trading above the line, that stock may be overvalued. If it's trading significantly below the line, it might be undervalued. And by this metric, as you can see there at the Gallagher, it's tracking pretty well. So from a cash flow perspective, Gallagher looks reasonably valued. Can I use Value Line to identify stocks to sell? I'm assuming you mean either sell from your portfolio or sell short. Our ranking system or our analysis typically doesn't include short research, but we have a lot of customers, of course, that read our reports, look at our ranks, and if we're not favorable to the stock, either by the ranks or what the analyst says in the analyst criteria or in the estimates, that could be obviously a trigger to sell. In our main stock selection services, in Select, in Dividend, Income and Growth, Special Situations, etc., we provide very clear sell information. Those stocks are to build a diverse portfolio, and if you are a subscriber to that product, you will get an email or phone message telling you to sell when we don't like a stock anymore. So it's a little different depending on which product. Can you explain how to determine cash flow? Yeah, we calculate cash flow by taking net profit, adding in depreciation, subtracting out preferred dividends, and dividing by shares outstanding. You'll see if we're looking at AJ Gallagher, if you take this 360 and 460, divide by 182, you'll get 450. They don't have any preferred stock. All right, I believe that's all of the questions. Take a quick look. Oh, all right, one more. Please explain relative price strength in the stock chart. The relative price strength is this dotted line underneath. When that line is increasing, meaning getting larger from left to right, that means that stock is outperforming the value line universe of 1,700 stocks. In turn, when it's going lower from left to right, it is underperforming. All right, I believe that is. Oh no, sorry, they're still trickling in. If we find an error in a report, who can we report it to? Hopefully, you don't find any, but you can email those to me. We have various checks in place, but I hate to admit it, but we're not perfect, so errors do come up from time to time. Typically, we fix the error, republish the report, or put out a supplementary report if we want to change something or have a retraction. What is the shadow line between 2008 and 2009? This is the recession. As you can see, shaded area indicates recession. So whenever there is a recession, a real retracement in the market, we show that. And as you can see, this stock, just like everything else, got hit pretty hard back then. The high in 2008 was $30, and it went down to 14 and change as the low in 2009, so it lost over half its value. All right, a lot of questions. Thank you guys so much. Can a Value Line 600 subscriber do a stock screen? Yes. All of our equity products, 600 included, can use the screener, can use the watch list, can use the alerts. But for the screener, it will only show you full data and results for the stocks that are in your coverage universe. So you will be greeted with kind of locks that show that you're not entitled to that information. Does Value Line provide the data in a table which can be put into Excel? Higher level subscriptions, subscriptions for our institutional and professional users, have the ability to export, but not our lower level subscriptions. All right, somebody wants me to repeat what I said about selling stocks. Okay, so first, for our main equity publications, this is the Value Line Investment Survey, the 600, et cetera. We'll often mention in our reports in the commentary, or you'll see the ranks. If we see something unfavorable, we'll recommend that people not take a position here, take profits, et cetera. However, if you're looking for very strict to the point sell recommendations, I would recommend checking out some of our monthly publications like Select and Dividend Income and Growth, where we tell you directly when a stock becomes unfavorable in our light. You'll get an email or a phone message saying sell this stock, and we'll give you the reasons behind our recommendation. All right, if anybody needs my email address again, it's iGendler at valueline.com. That's IGENDLER at valueline.com. All right, what is the relative PE ratio? That is the stock's PE relative to our overall universe. So for Arthur J. Gallagher, the current PE when this report came out was 24.1, which is 15% or 1.15 higher than the average stock in our universe. Can you comment on how to evaluate the annual rates of change? Sure. let's go down here. Annual rates of change. Here, as you can see, is the average over the past 10 years, 5 years, and our projections. What's good to note is obviously you want to see healthy returns, but you also want to see how they do over time. For instance, over the past 10 years, Gallagher has increased their share earnings by 2% a year on average, but looking 3 to 5 years out, it's also one of the reasons why the stock made the cut in our screen. We're looking for far greater returns on earnings. So it's a 3-year base period versus a 3-year base period. So we do that with the 2017 numbers now available. This will soon increase from 15 to 17 to 21 to 23, but the calculation is the same. You take the average of the 3-year period, 2014, 2015, and 2016, and compare that to our 3 to 5 year estimates, which is an average of those 3 to 5 year of those 3-year periods. We do that to smooth out any 1-year gyrations in the numbers. All right. Is there a document or tutorial that explains in full how to read the value line report? Yes. That's available in the investment education section, in the tool guides. How to read a value line report. I would also recommend the investment survey product guide and the ranking system guide. There's also tutorials on our YouTube channel. All right, I use a mutual fund service and would like to know if it has an online screener. Yes, it does. I can just quickly show you that. So for those of you that don't know, our mutual fund product is called the Fund Advisor. You can access it from the quick links. And there's the screener. So you can sort by rankings, historical performance, expenses, etc. All right, I believe that is all the questions. Thank you so much for the great questions and the contributions and your attendance. I hope you found that very helpful, and thank you very much. Once again, this video will be posted on our site and YouTube channel within 48 hours. Thanks and take care.